When you look at the residential market, you look at the commercial market, it's all the same problem. It's the contraction of credit. So, and the significant contraction caused by the change in underwriting standards. So that same developer that was financing a large project, we're seeing that in the New York region, wouldn't have qualified a couple of years ago. The way you characterize it now is you need an arm and a leg. 2 years ago, you just had to have a pulse, and that is really the driving factor. So anybody, there's no funding available right now for new project development, for commercial lending for the most part, without very onerous terms, and that has essentially stopped the flow of transactions.
Yeah.
What's really major about it is that, yes, mortgages are clearly available, but at very different terms. For example, if you were buying a multi-million-dollar property in New York, you were looking at 50% loan to value, meaning that if it's a $4 million property, you'd have to come up with $2 million. The investment bankers that have, maybe haven't lost their job at this point, don't have that, in general, don't have that kind of cash. So it's really contracted the demand for that form of housing stock. It's very different.
We say these things might solve themselves over time, and there are solutions in place, but do we have the time to wait, or does the downturn in the economy kind of become this self-fulfilling prophecy, which is what we were talking about earlier,
Well, I think in many respects, what happened with the Fed dropping the funds rate after 9/11, we sort of had this intermission between the recession that we probably should have continued to have in 2002, 2003, and now we're going through this massive deleveraging period, which is going to take a while. We had a 5-year run-up of asset values, and people are accustomed to that, and simply it's going to, we're looking at a multi-year window, and we still haven't come to terms with that. The thing that's fascinating to me, at least on the residential side, is when you look at what's going to happen this spring, you're going to see a little uptick month over month in activity, and there's going to be this, oh, here's a good sign, things are improving, but the reality is that it's seasonality and things are expected to improve, but simply won't be where they were in terms of levels of transactions.